On Friday, December the 3rd, the morning after DocuSign released their Q3 earnings results, DocuSign stock dropped 42% in one single trading day. So what were in those insane earnings to cause such a catastrophic drop in a stock in one single day? Well, surprisingly enough, net sales actually beat Wall Street expectations by 2.5%, but then whenever we look at earnings per share, we actually beat Wall Street expectations by 20.7%. Both top and bottom line beats. The growth for this company truly is to be admired. Whenever we look at total customer growth, for example, we see a 41% compounded annual growth rate since 2013. And then whenever we actually look at their enterprise and actual commercial customers, which pay even higher amounts, right? We see a 52% compounded annual growth rate since 2013. And this company's growth in numbers are so good that they have a 121% net dollar retention rate, which means that their actual amount of customers that they lose is so minimal, but yet the amount of actual spend that their already existing customers start to increase the amount of contracts that they have is increasing so much. So even if their customer growth wasn't growing at a 41% rate or, commercial and enterprise by 52% each year, that, the actual existing customers are also growing the amount that they're spending by an additional 21% every single year. And then out of all that money that we're actually talking about, around 82% of that is actual gross margin and what they get to keep after they spend everything to run the business. I gotta tell you guys, I've been loving these software businesses, and I understand that they've been getting a butt kicking right now. But if you have some capital on the side and are able to actually buy into these tech stocks like DocuSign, for example, you get these companies with such beautiful gross margins and net dollar retention rates for absolutely so cheap compared to what they were going for just a couple months ago. Free cash flow, for example, now is sitting at around $90 million when of last year it was around $38 million, which that's an exciting statistic, but it's not as exciting as the actual free cash flow margin, which last year was around 10%, which this year is now 17%. Way better. But this huge drop in this company in a single day doesn't come by a fluke. There's obviously some bad news, and that's whenever we actually see their billings and their guidance. Their expected amount of billings was supposed to be around $594 million. What we actually saw was around $565 million. This is a drop in billings expectations by 4.8%. Obviously not good, which is actually shows what our future earnings are supposed to be like, and that's what really leads us into guidance. The company now expects their guidance for Q4 to be around $560 million, where previously Wall Street actually pinned it at around $573.8 million. But the real question that you guys have to be asking yourself is the 42% drop in the stock actually worth, the 4.8% miss on billings or the 2.4% miss on guidance? Now, I don't really think so. Who's to say that because we didn't beat, Q3 earnings by a massive amount, by a 20.7%, they were so off whenever it came to our actual earnings per share, who's to say that that couldn't happen into the next quarter as well? Think about it. Some people like to think about DocuSign as just being a work from home stock. I don't actually like to think so. Did you know that the average document approval process per record costs around $17? That includes all the paper, printing, delivery, postage, courier, and fax. One analyst actually says, the large benefit from e-signature process is so obvious to the extent it would be bad business practice not to embrace the technological development. Governments are promoting an eco-friendly environment, right? So it's about time that, regulators are going to start enforcing by law or even by incentives to, get business onto e-signature processes because it actually saves a lot of trees. And DocuSign is the main leader right now, and their service is amazing, actually offering 350 plus different app integrations, as well as custom API integrations for everyone's businesses that will go on their websites and everything that they might need to continue business as usual. All of this leads to a total addressable market of more than $50 billion worldwide. And I know that everyone just uses their main e-signature process, but there's actually a lot more to this company, like how they're trying to expand into different products every single day. The newest one this quarter actually being DocuSign Notary, where a notary is able to actually screen the actual participants in the DocuSigning process for really important documents like property deeds, wills, and even power of attorney. It's not a huge product, but it's just one step forward into actually digitalizing, this document processing space and dominating the market. Cathie Wood actually, being the queen of buying the dip, she actually came in and bought 747,000 shares of DocuSign on Friday whenever we saw that 42% dip. ARK Invest even notes that yes, they do think that, right now the actual growth is slowing because it's coming off of the pandemic, but they do think that that growth is going to re-accelerate and they're willing to put their money where their mouth is. Even the CEO of DocuSign, Dan Springer, actually said, I'm surprised. I'll be straightforward with you. I do not see a reaction in the stock price to be commensurate with what I think is a much less dramatic business performance change. He even goes on to say, and I think this is a super big bull sign, but I've made 2 phone calls since I saw this reaction. First was to my general counsel, and I asked him if there is anything that stops me from buying this stock. He said as long as you wait until the window opens on Tuesday and you haven't been selling shares. So therefore, you can buy all that you want. And the second one was to my financial manager and actually lined up the $5 million of purchases. So if the stock doesn't dramatically increase, I'm going to continue to buy shares. Wow. I mean, this is really exciting, and trust that I'm actually going to keep up with this stock as it continues to progress, and if it keeps on dipping, I mean, I'm only going to have to keep following it. I might even, buy the dip if it stays at this price. But if you guys like this sort of content and want to see more DocuSign or potentially even other financial stocks that you might be interested in, make sure you guys hit the like button and subscribe down below if you want to see more financial content just like this. Anyways, I really do appreciate you guys watching, especially if you've gotten this far, but hope you guys stay safe trading, and I'll see you guys on the next one.